please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We have one of the best minds in the business, Rakesh Biyani, the joint MD of Future Retail, joins us now, and he's with us here in the studio. Rakesh, good morning. Always a pleasure speaking to you. You guys recently launched Retail 3.0, right? You're blending technology with brick and mortar retail. Tell us a little bit about what the growth of the business in retail could be over the next couple of years.
I think overall the consumption space is becoming stronger and stronger, and as sort of we settle down with the new GST regime, and we see shift happening in the way the product goes, the assortment strategy moves on. We are seeing a lot more footfall come through. And when we look at what is that we're trying to do with Retail 3.0 is simply, the way the metro cities are emerging in India, traffic is becoming a problem. And we're trying to say that, we need to have stores much closer to where the customer is consuming. And using technology is about ensuring the fact that we have the largest assortment on offer, and also address one of the bigger problems that is there in the direct-to-home kind of a business that is happening, or through the e-commerce, which is really the cost of serving the customer. And using these stores, we believe the fact that we can reduce the cost of how we serve the customer. And at the same point of time, because of the club data that exists and the data around the behavior of the consumer, we'll be able to customize the assortment at the stores and predict what the customer is likely to buy, and sort of bring in products more closer and really try and create them available on a real-time basis. And that's the journey with Retail 3.0. So I think what is happening is the fact that across the world, brick and mortar stores seem to be performing much better today. I think everybody sort of are confused in terms of how do you really make a pure play e-commerce business work, and that's the reason we find the fact that so many more pure play companies are looking at going back into some brick and mortar, and at the same time, brick and mortar companies are sort of looking at the online play, and that's the two combined together is where the value is going to get created in the future.
Fair point, Rakesh. We realize that in our individual experiences as well, using a bit of both, and maybe a large part of brick and mortar than we originally thought. But let us take it company by company. Future Retail. Your everyday low price is the strategy that you seem to be now adopting. Tell us how have same-store sales growth panned out for the fourth quarter or for FY18, and what's the vision? So
the last year has been very strong, and I think for us the like-for-like growths have been sort of leading ahead in the industry. Close to about 16% is what we sort of were able to deliver, and the belief is the fact that we'll be able to sort of improve upon that in the current year. And when you look at the single largest program that we've announced, which is Har Din Lowest Price, which is our biggest offer on the food. And what we've been able to do there is, over the last 9 months, rework where the supply chain is running, rework the quantity negotiation with a lot of our vendors, and sort of all package it together with a massive saving program, which is available throughout the year to the customer, which is sort of different from what Big Bazaar was doing in the past. We did have a lot of more, some days where the savings were significantly higher. We believe that, for the kind of growth that is existing, we need to sort of leverage our stores for 7 days a week. And that's the direction that is in. And
but this plan is very similar to what DMart has been doing, right? So in a sense, are you okay with sort of sacrificing margins for better volumes?
I don't think so. We are sacrificing margins out here. I think it's about discovering the volumes, right? Okay. And I think for the last 2 years, we've been, we are a multi-category business, and we have strong volumes in both the fashion and the home business, and grocery is another large share of our business. Over the last 2 years, we've completely revamped those two categories, and we've seen how the customers reacted to it. We moved away from the deals to a more honest price, first price right kind of a strategy. We focus on the availability, focus on the ease of customer shopping, and all of that have worked out very well. And I think for us, we said the fact that if we have to now discover the next set of volumes, considering where the supply chain is sort of getting eased up, the kind of distribution centers that we are trying to create, the move towards Har Din Lowest Price made a lot. It's actually the right thing to do for the customer's behavior, and I think the customers like it. It's not about it's so much about collaboration that we have really worked out here, you know, along with the brand companies, and because each one of us want to discover higher volumes. So it's really a collaborative effort that one has done.
Okay, let's get to the story for which we actually invited you today, Future Lifestyle. I mean, this brand factory, I mean, how does that concept work? Even that is a low price model, right?
It is.
A volume model, rather.
It's a volume model, low price model, and it's with a portfolio of brands. Close to 500 plus brands, always at a great price. Come to this destination, touch and feel the product, see the right size, and make a buy. And great deals through the year. You know, that is what Brand Factory is. And 60 plus stores, that's what we ended last year with. We believe the fact that there's going to be a potential to make up to 300 odd stores in that concept. And it's worked very well across the country. You know,
what's the revenue growth, SSG, I mean, footfall growth, volume growth? Give us some idea of why you say it's fired well.
See, if you really look at what's happened in Brand Factory, is that almost 50% of the stores are less than 2 years in business, right? So still a lot of these stores are still discovering their bases, right? And it was completely a new channel in the market, you know, and most of the brands have taken time to understand the impact of that channel. And today brands are sort of understanding that here's an opportunity to engage so many more new customers, right, at a Brand Factory kind of model, because it's a different profile of consumers who are walking into a Brand Factory. There are always people who are seeking the best, seeking value, and some are seeking extraordinary value. And I think Brand Factory is really designed to deliver extraordinary value to the consumer. And it's working very hard to ensure the fact that we also have the latest trends available to the customer. So combine the two together. So the like-for-like growth again have been on the higher side, close to about 16–17%. But I would say that, you know, the CAGR growth with all the expansion, etc., one could look at in excess of 30% over the next 4 years.
So, okay, 30% expansion. All of this expansion needs money, right? That's where funding talks come in. I mean, there are reports suggesting that Flipkart is looking to sort of buy some stake. Are you looking to part with any stake from the Future Group, and if yes, how much?
So I'll tell you what has happened is the fact that, you know, totally approximately we need about 350 to 370 crores a year to expand for whatever we are projecting for ourselves. And if you look at the EBITDA that we're already generating and the cash that is getting generated out of the business, we're quite well funded on that front. And over the last 2 years, you know, there's been a significant improvement in the efficiencies around the working capital management, and also the debt levels itself have come down significantly. So FLF, you know, Future Lifestyle Fashion, is in great position. Central as a business model is going very well. Again, very high growth, significantly ahead of the competitors today. Completely revamped the store concepts over the last 2 years. The new high definition stores are amazing response from the consumer. The other area that is very well focused for us, which is also a huge margin generator, is the brand business. And there, the portfolio of brands is quite large. Right? But we are focused now on about 5 of our power brands that we really want to grow. And out of that, Lee Cooper is really the biggest brand that we'll end up having in the next 2 years. We've recently acquired the entire license for footwear, and that's going to sort of be our most important play in the entire footwear category. And Lee Cooper for us, over the next 5 years or so, we're looking at close to 2,500 to 3,000 crores in consumer revenues.
You know, well, let me finally end with, again, a question on your overall, on all your businesses. Where is e-commerce for you? I mean, all said and done, maybe a large part of Indians will always want a touch and feel buy. But there is a growing millennial generation which is more attuned to, at least say, groceries. I mean, Big Basket is doing very well. Sure. What share comes, and what's your plan over there?
So we're very committed to sort of ensure the fact that each of our concepts are going to be available on digital platform also. And we are doing a lot of digital activation. Currently, a lot of our digital activation is focused on getting the customer in this digital world to come and shop at the retail stores. At the same point in time, almost all our concepts today are available to shop online. Right? And in the long run for us is omni-channel first. It's really about serving the existing set of customers. And if it is required to be delivered back at home, that's exactly what we will end up doing too.
So are you looking to sell any brand at any point in time and unlock any value there?
So in Future Lifestyle Fashion, there is a portfolio of investee brands that we have. right? And as and when they have matured, in the past also we have sold them, and as and when more brands will mature, those would be we would look at selling them to raise capital to fund our expansion.
So anything maturing this year in this fiscal?
I think it will happen over a period of time. So
Okay.
A period is a year. Rakesh Biyani, it was a pleasure having you with us. Thank you very much for dropping in our studios.